Welcome to this channel. Today we are going to discuss the concept of technical analysis and explain it simply using a simple example. So let's get started. At its core, technical analysis is a method used by traders to study historical price data of stocks, currencies, or commodities. The goal is to identify trends in the price movement which can help predict future price direction. Whether fundamental analysis focuses on a company's fundamentals, financial health, and intrinsic value, technical analysis solely relies on price charts or end market data. Now let's take an example to understand it better. Imagine you are walking along a beach, watching the waves come ashore. You notice that the waves have a rhythm, sometimes rising high, sometimes receding. As you observe further, you see patterns emerge. Some waves are larger, some are smaller, and some even form gentle arcs. You might even notice that certain waves formulations tend to repeat at regular intervals. In this scenario, the beach represents the market and the waves symbolize price movements. Similar to how waves follow patterns and rhythms, the price of particular asset in the market also forms patterns and trends. As you continue your stroll on the beach, you start noticing more intricate details. You observe that the size and shape of the waves are influenced by factors like wind, tides, and other factors. Similarly, in technical analysis, traders use different tools and techniques to analyze price charts. They look for specific patterns such as support and resistance levels, moving averages, and trend lines. As you become more skilled at observing the waves, you might start predicting how the next wave will behave. You might notice that when the wind is strong, the waves tend to be larger, or when the tide is low, the waves become gentler. In technical analysis, traders use these identified patterns and trends to make predictions about future price movements. For example, they might notice that whenever the price of a particular stock approaches at a certain level, it tends to reverse from that level. As you become more engaged or interested in watching the waves, you also realize that there are moments when unexpected factors like sudden storm can disrupt the regular patterns. Similarly, technical analysis has its own limitations. It doesn't consider external factors which happens accidentally. Just as you can't predict the exact height and shape of the next wave, technical analysis doesn't provide definitive future price predictions. It is a tool that helps traders make educated guesses based on historical patterns and trends. So that's it for today's video. A different perspective on technical analysis. It's like observing the waves on a beach, studying historical price data to identify patterns and trends that can help traders navigate the market. If you found this video helpful, give it a like and subscribe to this channel. We will see you in the next video.